Good morning to people who are in our midst today here in BCIC office, and also people who have joined us virtually. It gives me great pleasure to welcome Sri D.P. Nagendra Kumar, IAS retired, former member BCIC, and Mr. G. Shivdas, Senior Advocate Shivdas and Shivdas Law Chambers, to this session on India Budget 2023, Indirect Tax Perspective. This session is being organized under the aegis of Indirect Tax Expert Committee of BCIC, chaired by Mr. N.R. Badrinath, partner at Singhvi Unni, and co-chair Mr. Arun Ramachandran, head finance tax Tata Consumer Products, along with Ms. Mamatha Anand, mentors Mr. P.V. Srinivasan and Mr. G. Shivdas. Moving on to the next slide. I would like to acknowledge our sponsors, annual sponsors for all the events that we do at BCIC. That's Mrs. Bueller, Continental, Fundermax, IAMPL, MTR, Dona, SDM IMD, Vishwas, TVS, and Wipro. It gives me great pleasure to welcome Sri D.P. Nagendra Kumar and also Mr. Shivdas for this session. Over to you, Mr. Badri, to initiate this session.
Thank you. Thank you, sir. Thank you so much. A very good morning to all of you. Very good morning, and thank you for accepting this invite, sir. It's always a pleasure to hear the combination of the two of you. I mean, we look forward to every discussion that is possible where we have both of you on the panel. Thank you so much for this as well. So as discussed, the idea of this discussion is to spend some time on what really the budget has, both customs and a GST perspective. Of course, GST is never a surprise because the element of surprise is gone away because of the GST Council. Having said that, there are 2 or 3 amendments which have happened this year. We assume it is part of the 48th Council because the minutes is not yet out. It was not in any of the earlier minutes, but yeah, we infer that it is part of the 48th. So, sir, at least the way we look at it, there is so much in the budget. I mean, newspapers are, all of us have seen the newspapers and heard a lot of views. But personally, my take is, sir, there are a few things as far as direction is concerned in this budget. Maybe a 10 lakh crore of capital outlay. Then there is something on good governance. There is something on reducing litigation. Then we have use of AI, more use of AI. There are centers of excellence that are proposed and so much more. But limiting it to indirect taxes, sir, there is this, we say, this is the first budget actually, instead of looking at it as more or less the last budget of this term, right? It is the first budget of the Amrit Kal. That's the way it is being considered. There's so much of work to do. It is forward-looking is the way I look at it. With that, sir, we want to hear both of your inputs in terms of how you look at the budget overall from an indirect tax perspective, and maybe then we'll look at questions from all of them. We'll have the format as, sir, we'll request you for a presentation for about 15, 20, 30 minutes, then Mr. Shivdas, then maybe we'll open it for the question and answers. Over to you, sir. Thank you so much.
Thank you, Badri. My co-speaker, Mr. Shivdas, office bearers of the Indirect Tax Committee of the BCIC, dear participants. A very good morning to all of you. I'm glad you have taken time off on the weekend to listen to the budget 2023. Today is the 4th day since this presentation has been made in the Union Parliament, and a lot of analysis as you would have seen in the public space. The budget 2023 and its focus is continuing the efforts of managing the Indian economy in the most difficult times. Perhaps the budget focuses a lot more on domestic consumption and also look at how do we generate the wealth creation within the country in terms of providing enablements in terms of those sub-rishi propositions what the Honorable Finance Minister has laid in a budget speech. The first and the foremost, insofar as the budget is concerned, is with regard to inclusive growth. The inclusive growth is one of the fundamental guiding principles of the Indian polity. The inclusive growth not only means the programs which has been charted out in the past and they are continuing in terms of poverty alleviation, rural development, employment creation, and infrastructure development, etc., in the Northeast region, etc. But it also provides for, I think, meeting the aspirations of the youth in India. The last mile connectivity is a continuum of that proposition. The infrastructure and investment, as Badri has already mentioned, around 3.3% of the GDP is being focused on CapEx. And you would have seen the huge spend for the railways at about 2.4 lakh, which is 9 times of what it was an allocation in 2013-14. The Vande Bharat trains, which have been inaugurated by the Honorable Finance Minister in the past, and the number of trains proposed, I think it's going to completely modernize the way in which the railway journey travel will happen in the country. The budget also focuses upon, I think, some of those things like good governance. I think all of us have seen how leveraging the technology, the information and communication technology, is been providing better delivery in terms of direct benefit transfer and also prudent financial management in the government and also increasing the efficiency. I think the public digital infrastructure, which is being proposed, would also be, I think, in alignment with that object. The budget also mentions a lot about how do we look at the energy sector, the net zero emission, and also look at how India can play a very leading role in going green. In all these aspects, what the finance minister has emphasized in the budget, the taxation is also focusing on the same issues. If you look at, for example, the customs duty announcements made by the Honorable Finance Minister, they're very few, but they're very, very clear with regard to the goals which has been laid down in part A of the speech. Towards increasing the domestic value addition and also giving a fillip to the manufacturing in India, complementing to the efforts done in the area of phased manufacturing program as well as PLI. I think the complementary act in terms of reducing the taxes on intermediaries and raw materials, including the capital goods in some of those sectors like, lithium-ion batteries manufacture, and also reduction in tax in terms of the GST paid on the ethanol component of it, which is blended in the petrol and diesel. I think they are clearly indicative of the fact that we are not only looking at increasing the domestic value addition, but also keeping in conformity with what our commitment in COP27 in terms of the carbon emissions are concerned. Now, the other announcement which has been made in the Customs Act with regard to review of exemptions. This is one aspect I think we have to keep it in mind. The tax base and the exemptions do not go together. There has been a consistent effort in pruning the exemptions over a period of time, in addition to simplifying the rate structure. The finance minister has mentioned in the budget that out of 196 exemptions which are governing today the customs regime, 146 exemptions have been reviewed to be extended for a period of 1 year, the subject to a further review. There are very few exemptions which have been extended for 2 years, and a couple of them will be in the 5-year category. The budget papers do mention about those notifications with the line item numbers. But what we need to keep it in mind is that an effort is to prune the exemption so that the distortions which are created through an indirect tax is minimized. At the same time, some priority areas will have to be looked into for the purpose of boosting the domestic production and also increasing our export potential. The variations in rate of taxes insofar as exemptions are concerned, I'm sure I think my co-speaker will take you through into the details and how it impacts on the industry. But suffice to say that the Customs Act amendments are in tune with the broad policy perspectives laid in the budget. Turning to the GST part of it, before I go into the GST, the one part I just want to emphasize upon is that, you see, ICGR route, which has been proposed in the budget in some of those end-use based exemptions, will bring in not only the transparency, but also leave an audit trail in an electronically administered manner. The regulations are already out, and some of those concessions will be subject to that monitoring by the IGCR route. GST, as you're all aware, Badri has rightly put it, there is no surprise element on that. But 47th and 48th are the 2 GST Council meetings which held during the last year. The entire year witnessed only, I think, the Chandigarh GST Council meeting, 47th GST Council meeting held on 28th of June, and the other was in the month of December, to a virtual mode. Now, the 47th and 48th GST Council meetings have proposed some legislative changes. And those legislative changes, some of them are for improving compliance, some of them are for facilitation. I'll take up the first amendment, which has been proposed in the 47 GST Council meeting, which has been taken further in the 48 GST Council meeting, is with regard to doing away with the mandatory online registration for small sellers. I think, as you're all aware, the Section 24, which mandatory registration is required, all the sellers are online. Irrespective of the threshold, are required to take a registration and file the returns and meet the GST obligations. I think this has been one of the industry demand, and post-COVID, I think there has been a tremendous impetus to the online sellers and the service providers in terms of reaching out to the customers. The government had considered this, and in the 47 GST Council meeting, a decision was taken to remove the mandatory registration requirements and extend the threshold exemption. Whatever is applicable to goods should be applicable to the online sellers. But the challenge will be, I think, this would be only restricted to only intrastate supply, like similar to what is there in the physical mode. Now, the nuances and the detailing in respect of the IT enablement for implementing this was to be rolled out from 1/1/2023. But since GSTN was not ready with that, I think now the date has been postponed to 1/10/23. Now that all of us know, because the agenda point was there and the minutes of the public domain, it's available. Now what's happening in the 48 GST Council meeting was with regard to extending the same benefit to the composition dealers. In principle, decision was taken in 47 GST Council meeting that such an exemption should be extended to even the composition dealers who would be opting to sell through their products through the online platforms. So that required an amendment in Section 10. I think the Section 10 amendment has been brought in to have this enablement. Also, I think corresponding amendment has been made with regard to Section 23. Overriding powers in Section 24 and 22 has been subjected to the provisions of Section 23. So now I think even those category of persons who are otherwise would have fallen the mischief of Section 24 and 22 has been exempted from the registration requirements in 23. There's a first amendment. It's an enablement. I think we need to wait for another about 9-10 months before actually the scheme is rolled out for implementation. The second important amendment what has been made is with regard to the much discussed input tax credit. Now, some of the things which have been done in 47 GST Council meeting, aligning Section 37, 39, because we have done away with 41. The magic concept is not there. Filing of GSTR 1(3)B become the default filing system. So there are some alignment of amendments in sections like Section 54, etc. has been done. But more importantly, what the industry would be looking at with regard to the block credit issues under Section 17. Fine. I think we have added one more now item in the form of expenses incurred towards corporate social responsibility in terms of the requirements of Section 135 of the Companies Act. I think that has been disallowed and it has been disabled. The logic behind this, if you can look into the agenda point of 38th GST Council meeting, 48th GST Council meeting, it says that since the Income Tax Act do not recognize expenditure towards corporate social responsibility as a deductible expenditure, aligning with that act, I think probably the GST Act has also been amended. But there are views possible. I'm sure I think Mr. Shivdas will throw more light on that. Having defined the suppliers in the course of furtherance of business, I think CSR becoming a mandatory expenditure. How far this restriction would be in tune with that broad principle as to be discussed. But the audience may ought to be aware that there were conflicting advance rulings on this topic. A couple of advance ruling authorities have held that the expenditure toward the CSR, I think the input tax credit is eligible. A couple of them have held as ineligible. There was ambiguity on that. I think perhaps at least this budget has brought in the clarity that it is an inadmissible input tax entitlement. Insofar as the incidence is concerned to the corporate world is concerned, it's not going to add. It's only going to shrink the expenditure actually going into the beneficiaries. Otherwise, I think the tax element would be coming into the overall cap of the CSR expenditure. limit, whatever has been prescribed in the Companies Act. The other aspect which probably I think with regard to input as credit will be worrying some of you with regard to the amendments what has been proposed in Schedule 3, particularly with regard to the warehoused goods before they are being cleared for customs, whether that would amount to some amount of a reversal of the credit. I just want to clarify this issue. See, this issue of actually dealing with them as neither supply of goods or services, there is no change in the position. That means IC sales, goods which are transferred from one warehouse to another before they are being custom cleared, all of them will be treated as neither a supply of goods or services. Therefore, the reversal of the credit is not required. The exception which we have been proposed in entry number 8A is with regard to the duty-free shops. As you're all aware, I think post GST implementation, there were a couple of decisions, one in Singhvi Patil, another was in the Flamingo, wherein the Honorable High Courts have held a view that the duty-free shop supplies, both outbound and inbound, should be treated as deemed export because they are beyond the customs area. And consequent to which, I think there was a rule 96A was introduced, and also I think a corresponding notification was deeming it as an activity which is not subject to tax as exempt, and also at the same time claiming the input as credit as equivalent to an export. Now, this was not strictly in alignment with Section 16 of the IGST Act, where the deemed exports have been very clearly laid down. The zero-rated supply alone will have an ITC refund. In order to correct that and also align with the judgment of the High Court, the 47 GST Council went into the detail of it, and for the interregnum period, we amended the law to be aligned with what the judgment of the High Court have said. But for a future, the GST Council took a very conscious decision that we will amend the law. The proposal at that time was that insofar as the departure DFS is concerned, the duty-free shop is concerned, obviously the passenger is taking away the goods. The earlier view of the department that it is the passenger who is exporting and not the duty-free shop, the government conceded and said that it should be treated as an export, and therefore the ITC should be available for refund to the operators in that area, including the services which are accumulated. But so far as the arrival DFS is concerned, I think the benefit of that ITC refund was proposed to be denied because it is getting into an IGST and it is getting into a payment part of it, and the passenger is paying tax. So the ITC to treat them as an export will not be proper. So this amendment, what we have proposed in Schedule 3, entry number 8A, with regard to the reversal requirements treating as an exempt supply, will be only in certain circumstances. Unfortunately, the fine print of the word used in the budget amendment is not been noticed. So the government, by way of a rule and by a prescription mode, would restrict the credit eligibility for the refund purposes only in respect of arrival DFS. This will be following it up. So it's not that every warehouse goods, when they are being transferred from one end to another end, the denial of credit would happen. It's not at all there, because that would run contrary to the amendment what has been already done. Prior to 2019, now it has been retrospectively amended. It will be treated as neither supply of goods or services. The carve out of that for the purpose of treating as an exempt supply will be only with regard to duty-free goods in the arrival DFS. That will be a matter of a clarity which will come subsequently. The government also may consider a few other circumstances, but this is an enabling provision. I want to make it very clear to this. And the other aspect of the amendment, what we have proposed is very, the thing is that the 4 sections which have been amended, be it section, we are talking about the 3B, R1 filing return section 37, 39, 44, and 52. The maximum time limit for filing the returns has been kept at 3 years. I think the amendments are aligned in the same language, but a discretion has been given to the government to extend the time limit in certain category of taxable persons or in certain circumstances, the extension can be given. Now, this will not take away the power of a recovery and demand proceedings under 74, should there be a justifiable ground for invoking that. The persons are denied from filing a return, but at the same time, the recovery provisions will continue that. There's an amendment which has been carried out. And on the refund again, there is a manner in which the refund interest will be calculated is something which has been provided for. The reason behind this is like this. 60 days is the time limit for refunding the tax. And if there is a delay beyond 60 days, the interest default clause follows. You're all aware that the interest is at the rate of 6% or whatever it is. Now, this amendment proposes to prescribe a manner of calculating the delay. One of the observations of the C&AG in this year's submission to the Parliament has been that this interest will be made applicable in all cases of delayed refund processing beyond 60 days. Now, if the delay is attributable to a taxpayer not making available the information, you are all aware that any deficiency memo served and the refund, which is the intergram period, will be excluded for the purpose of timely computation is already there with the previous amendment. Now, this would be that where a situation, the delay happened on account of the delay attributable to the taxpayer in clarifying certain things, the formula will have to be done in the prescription mode. The law is only enabling that executive to prescribe the manner in which the delay beyond 60 days will be computed for the purpose of interest will come in detail. But there is a detailed deliberation happening, but this is only an enablement. But 60 days, in fact, the C&AG also recommended in the same report that if beyond 60 days, if there is no delay, there should not be any discretion with the departmental officers and it should be automatically credited to the electronic credit ledger like a refund. That's also the view of the C&AG, like what happens in income tax. So this enablement is only on the restriction part of it, but enablement and automatic refund also the GSTN would work on that. So it's on both sides. Now, the remaining part of it, you are all aware, the government has been talking about a lot of efforts in terms of decriminalization. The budget itself makes a mention that close to almost about 3,000 plus issues in which I think decriminalization under various legislations have been done. Now, in the GST Act, there are 3 cases which are being proposed to be decriminalized. And those 3 situations are very, very simple violations like, obstructing a proper officer from performing functions, tampering with evidence, and also with regard to, I think, not making available the information when it is sought. So they are being decriminalized. No prosecution is possible for these offences. Now, correspondingly, there are amendments to Section 132. But before that, you also should look into one additional penalty provision the budget has proposed is in Section 122(1)(b). That is with the electronic commerce operators, since e-commerce operators will be responsible for an unregistered person doing supply through the portal. If any of those exempted category persons are allowed, other than exempted category persons are allowed to trade in the e-commerce portal, the penalty will be attracted to the operator. So also if in violation, if any supply is made in the course of interstate trade, that also will be a penal consequence. And also with regard to, I think, any of the failure to furnish information, the e-commerce operators is bound to give the details to that. Those are the penalty provisions imposed on this. So while on one part, the decriminalization is there in Section 132, this additional penalty provision is 122(1)(b). It's primarily to take care of this online registrant enablement. The another important section, I think the prosecution limit has been increased from 1 crore to 2 crore. All of you are aware. The rationale behind this that this decriminalization effort, of course, there was a lot of talk before the budget that it could be as high as about 20 crores or 5 crores, but the budget has proposed a 2 crore limit. But exception is supply of invoice without goods is still covered under 1 crore limit. There's a pathway. We will look at how exactly the decriminalization moves in future. 138A is something which we have discussed about it with the composition. The compounding of offences. The compounding of offences was not a preferred option by the taxpayer, as a result of which everybody was driven to dispute and litigation. Not every tax delinquency will have to be looked into from a criminal perspective. That's the government's intention. So I think the compounding provisions have been made a little more attractive by using burden for those who are going for compounding options from 25%. It was 50% to 150%. Now it has been brought to 25% to a max of the 100% equivalent to the tax element of it. Of course, the interest will have to be paid. That's without that goes without any mention about it. The Section 158A, what has been introduced is a consent-based sharing information. This is a completely new section which has been drafted. The object of this is to share the data, but subject to the consent to be given. I'll give an example as to where it will be very useful. You see, MSMEs and small taxpayers do borrow money from the financial institutions. Many times they find it very difficult to give a collateral security in terms of asset or mortgage, etc. What the government has done, the GSTN will enable a linkage with the Udayam portal and also with regard to the TRED platform, where the lenders will be linked along with the credentials of the person who is borrowing the money, keeping the GST registration and the GST compliance as a collateral for the purpose of borrowing. This is one way by which the leveraging of information which is shared will be ultimately to the welfare of the taxpayer. There could be other agencies which would be interested in sharing, but the government would ensure that such a data sharing is subject to the consent to be given by the interested party, also keeping the privacy, because the data which is held by the government in its fiduciary capacity is very sensitive. So the privacy issues will also be equally addressed. The detailing will happen in terms of the manner. And that's the background of that. Why section 158A has been introduced. But for these broad amendments, I think the focus in GST in the coming years is going to be continuity, stability, and also, I think, removing some of those pain points which the taxpayers currently face. We have all seen this. The revenue collection has been very buoyant. And this is notwithstanding the fact the nominal GDP has grown at 14%. The real GDP is estimated for 23 FI is around about 7%. The growth as on today in GST is around about 24%. So cumulative growth in revenue has been more than 1% of that 0.1%. And that has happened primarily on account of formalization, plugging of leakages and loopholes, and also correcting structural defects in terms of inversion, etc., etc. So looking forward, I think the finance minister has been looking at the GST revenue collection to be pegged at a much higher level. This year, so far from April to February 2022, the collection is more than 13.5 lakh crore. So we are looking at closing the year with about 18 lakh crore. Government would look at 18 lakh crore as a revenue. And this is bound to be looking at a much higher level, given the nationalization is going to be an agenda for the government to be taken up. Some of the efforts which have been made in the last year in terms of introduction of e-invoice, reducing the threshold, auto-population of the input tax credit and stabilization on that. And also, I think a lot more in terms of the filing discipline. And that has contributed directly to the increase in revenue. The buoyancy in the revenue is one of the factors which will determine how the government will look at some of those incompliances, because the revenue is a must for the government to meet the expenditure, particularly to the states, those who are no more drawing any compensation. So a good revenue growth is a good auguring measure for further simplification and rationalization of the rate. I would end here, and I think look forward to the panelists for any questions. And thank you once again, BCIC, for inviting me. I don't hold a formal position in government, but I continue to be a publicly interested person in GST, which has been so close to my heart. And that's where I felt when BCIC invited me. I said I will definitely, as an informed individual, would like to interact with all of you and share perhaps some of the perspective which may not be there in the public domain for all of you to appreciate. Thank you.
Wonderful. Thank you, sir. Thank you. Sir, at the cost of repetition, sir, it's always a pleasure to hear you. More than anything else, sir, I mean, I'm sure everybody here will agree with me. It's an open discussion that we have always had the opportunity to have with you. Sir, thank you so much for the clarifications on that 8A, because at least the plain reading is a little restricted in when compared to what you really explained, the restriction on input tax credit and the interest piece as well. Thank you so much for that clarification, sir. We'll maybe take the questions once we hear it from Mr. Srinivasan. Over to you, sir.
Hey, good morning to all of you. Respected DPN, sir, and all friends. It's always amazing to see DPN, sir, go through the amendments without a single piece of paper before him. going through the entire amendments in the same sequence. I keep seeing my presentation, it goes in the same sequence. I have not shared it with, but still in the same sequence it goes through. So that's amazing, sir. It's always nice to have you for the discussions and get a better insight into what were the intentions behind amendments. Because as Badri was pointing out, the amendments on a plain reading did not indicate that this is what is the reason for the amendment. So therefore, your clarification on what exactly is the reason for the amendment would help the companies or everybody else to really look at the amendments in that perspective. So to that extent, it will help all of us. What we will do is, I don't think I should go through the presentation in the same manner. I think he has done it enough. What we will do is quickly run through it, maybe
Sure,
for 10 minutes, we'll quickly run through it. Then certain areas where I thought few things were rather bothering me from the way it is being worded. I thought I'll express my view so that all of us can have a discussion on that. That's one thing. Now the amendments that are on these four: Customs Act, Customs Tariff Act, Amendment to the GST Act, and the CST Act. And in fact, the amendment to the CST Act is something which took everybody by surprise, because in fact that institution, namely the CSTA, the Central Sales Tax Appellate Authority, was functioning, I think, less regularly as compared to what normally the appellate tribunals are supposed to function. And then it was, I think, doing the job of a CSTA plus an advance ruling for customs or so therefore there was always a situation where the hearings were very few, and therefore it was definitely difficult. Now it's a good amendment to move those appeals to the SESTAT. But what is bothering me more is after a long time, we have an appointment of the SESTAT that has happened. Sir. All the members have got appointed now. And I don't know when it will start functioning, maybe by second week of Feb, etc. And most of the benches have a huge pendency of appeals. Bangalore bench has a pendency of appeals, I'm told, about 8,000, 9,000 appeals from 96, 97. So if you're going to, it's almost a pendency is from 96, 97. So if you're going to have a situation where these appeals, I don't know, the number of appeals that are going to be there from CSA is going to be very few. Therefore, these are also to be added. Then we'll have to look at how it will really function. Because we are really looking at legacy disputes. We are not looking at disputes that are going to help us for the future. These are all legacy disputes. How much of money we'll have to keep apart for taking care of those disputes. That's how the whole thing is. So not sure how this is going to translate. So that's one amendment that definitely took me by surprise, because it was never heard about, it was never thought about till now. So that's one, yes. Amendments to the Customs Act, as Sir was pointing out, is where the section 25(4) was inserted last year to indicate that the exemptions granted would be valid till 31st of March, falling immediately after 2 years from the date of such grant. So essentially, exemption getting restricted only to 2 years. Now that there has been an amendment that has been made by adding a proviso to it, saying that those restrictions will not apply, or the 2 years will not apply in respect of certain situations. It appears to be in respect of any multilateral agreement or any obligations under the international agreements, etc. So that, I think, more focused with what India's agreements with foreign countries in respect of certain movements of goods appears to be the reason why the restriction of 2 years is not available in respect of these situations. One. An amendment made in the Customs Act is to the Settlement Commission provisions, where a time limit of about 9 months has been prescribed from the day the application has been made for the Settlement Commission to dispose it off. Frankly, sir, to be between, I think within this forum, I can definitely say the Settlement Commission is not so much attractive these days, sir, compared to what it used to be for the SSEs. Mainly because one, the
Benches.
entire, one, the settlement, one, the
Benches.
seating of the benches and the members, and two is the benefit which I think the companies get out of settlement commission is very less.
Yeah.
In fact, the SPDLR scheme gave a much better benefit as compared to what the settlement commission seems to provide. So they'll have to pay up the entire tax. The interest also will have to pay up. So penalty, I think about 10% of the penalty is to be. I think companies do always say that why not we take a chance to even to litigate and see, and therefore how much of it will be attractive in terms of the settlement commission provisions is one doubt we have. Of course, the indication that we'll have to do it within 9 months of the application is a good indication, extendable by 3 months. So that is one. But the one more amendment that has been made is that if within 9 months they don't dispose it off, it goes back to the adjudicating authority or to start off with. I remember, sir, when the settlement commission provisions initially came in the central excise law, there was a provision that said that I'm not too sure whether it is still there. That said that if you go on you file an application and your application is rejected and you come back to the adjudicating authority, whatever you accept as your liability will be indicated or indicative to the adjudicating authority as being against you, as being accepted by you. Now, what is going to be the situation in those cases is something which is bothering, because if 12 months it doesn't get disposed of, you go back, do you start off with an unfavorable stance against you by the department? That's something that needs to be looked at. Yes. Yeah, that's fine. Customs Tariff Act, as sir was pointing out, changes in respect of the countervailing duty provisions of where the time limit has been, rather a specific provision has been introduced to say that when an order is passed on a review, etc., then there were some lack of clarity on what do you mean by on a review, whether review and order has to be passed, or is it a determination by the government that is good enough, etc. There were some decisions that took a view that you don't have a mechanism in place, and therefore how do you put that? So this amendment has been made. I am not too sure how many of you would have noticed. This amendments take place from 1995. It is retrospective 1995. So that's something which I was thinking, why is there something to rather rectify the mistakes which you have done before, and therefore you want to put in place a mechanism, is something which I was thinking about. Yes.
I think we had a couple of issues with regard to the anti-dumping duty where the Sistat Delhi bench had held that I think the due process by following the principle of natural justice should be done. Whereas the government was arguing that this is a question of policy making, and I think certainly this already the extent to which a domestic injury has been computed by the concerned authority in the Commerce Ministry. I think once that finding has been done, there has been a different view taken by the Department of Revenue, not necessarily agreeing with that or disagreeing with that. And therefore, I think the argument made was that the decision is amounting to doing a judgment on a finding already made. The government made its own submission before the authorities concerned, saying that this is a policy-making domain, and therefore, I think consultation, or for that matter, following a certain procedure like an adjudication or passing an order or decision may not be required. I don't know. This amendment would look into some of those arguments made and probably the enablement to the government to decide, because this is a delegated part of it.
Absolutely.
And those notifications are placed before the Parliament for ratification purposes. These amendments would take care of that broader design. And perhaps a retrospective amendment is to take note of those litigations already in pipeline.
Yes, please. Next. These are some of the changes that took place in the tariff on first schedule, second schedule, third schedule. Some of the items, the rates have been increased, and then the rates have been decreased for a few items, etc. That goes with industry specific. Yeah. Next. So now let's have a look at the amendments that have been made to the GST Act, especially the plain reading of the provision, so that I will indicate what my concerns are, and then all of you maybe can pitch in, and then sir can always clarify. This is the amendment to section 10 that talks about composition levy. where the person supplying goods or services through e-commerce was not eligible for the composition levy till now. Now, what they have done is they have made an amendment to say that a person supplying goods through e-commerce can now opt for composition and then go through that scheme. And the restriction will apply only to persons who are supplying services through the e-commerce operator. So this is, as he was pointing out, to give the benefit of the composition scheme to suppliers of goods through the e-commerce operator, making him on par with any other supplier who will otherwise operate in a non-commerce situation. So he can, thus directly supplying goods also will be able to enjoy that composition scheme. I think that's the benefit that has been sought to be given. Maybe this is an ask of the industry, and therefore the amendment has been made by amending section 10. Yeah. This is section 16. There is always a restriction in the GST law that unless the person receiving the goods makes payment to the supplier within 180 days, then the credit has to be reversed. Now, whether you'll have to make a payment of the value alone, or whether you'll have to make a payment of the value with the tax, or if you make a payment of the tax alone without making a payment to the value, these are all different combinations that seem to come out of this. But what they have now done is that, yes, you'll be entitled to avail the credit of the input tax on payment to the supplier of the amount towards the value of supply, so that the reversal which was earlier contemplated from the electronic credit ledger can now be made from your own either cash payment or whatever it is, so that your credit is in place. So this appears to be to enable companies to do the payment even through the cash or the credit ledger, and then so that whenever you make a payment to the supplier or the recipient, you will be in a position to take credit. That appears to be the intention as far as this section 16 appears to be concerned. Yes. Section 17. Now, this is where we were pointing out the value of the exempt supply has now been amended to include the value of the activities or transactions specified in 8A of the third schedule. Third schedule refers to those situations where it is neither a supply of goods nor a supply of service. And now this amendment has been made. Now, if you look at the provisions as it reads, a plain reading, sir, all that it says is that, yes, for the value of such activities or transactions as may be prescribed in respect of clause A of para 8 of the third schedule. Go to the next slide. Yes. Now, 8A, if you look at goods or services, no. The earlier one. 8A, if you look at it, only says sale of bonded goods to be construed to be exempt supply. Now, we always thought, I mean, till you clarified it, we thought all supplies made from a warehouse to goods, all supplies of warehouse to goods will be subject to this inclusion as an exempt supply. If that is so, then the credit always gets restricted in terms of the entire transactions. But then, sir is now clarifying that it is not meant to cover all supplies from the warehouse. It's only the duty-free shops and then the certain specific situations. So the word
as may be prescribed is what I think ultimately will come to the rule-making part of it.
Okay. As may be
prescribed.
Would have worded it better,
yeah, should have been
as may be prescribed in respect of clause A of para 8. So so that's the I also never thought about it. Because people asked me that what do you mean by this? Why high sea sales is not included as part of the exempt supply? Why is it that only sale of bonded goods has been included? So I was trying to find out why is it that they seem to restrict the credit only in respect of bonded goods. But then, as we are pointing out, the after effect of certain decisions for considering duty-free shops as deemed exports, and therefore they want to restrict it in that manner. We only hope what comes out of the rules in respect to the prescriptions has ample clarity.
Yeah. 96A and the corresponding notification will have to be rescinded and a substitute will have to come. Those are the matters you will see after the Finance Act is consented. I think probably those will come in place.
Okay. Good, sir. Now, this is section 17, the restriction in terms of expenses on CSR expenses. Yes, sir. The amendment seems to say that it is in terms of the section 35 of the Companies Act. And then when we look at the Income Tax Act, there also in terms of section 31, CSR activities are not considered as expenditure incurred for the purpose of business or profession. Maybe to be in alignment with what the income tax says and where it is considered as not part of the expenditure, this is sought to be restricted or denied by saying that we will put it under 17(5). There were two advance rulings. One that said that yes, it will be in respect of your business and therefore it was granted. There was one that said that no, it is not in respect of business and therefore it was not allowed. There were two advance rulings, the divergent ones. And this seems to put at rest this controversy that ITC will not be available in respect of CSR. Sir, I always thought, I mean, this is my personal view. You always know my personal views, but I always thought that when you look at input tax credit, I think you should look at input tax credit from a larger perspective of what is being used in respect of your business. Because every input tax credit which you take is relating to an expense made by you. You have paid for it and then you got it. And then when the government on one hand says that you have to necessarily spend, there's no option available to a company. You don't tell a company, I give you an option, you want to spend, you don't want to spend. If a company doesn't spend on CSR and then you tell them that, Mr., you have not spent on CSR and therefore I will not give you the ITC, is one situation. But then you make a company spend compulsorily on CSR, and then that's quite an amount. And then on the other hand, you say that we will not give you the credit. I thought was slightly going away from the larger rather perspective of an input tax credit in GST regime, especially when you have defined input tax credit to be in furtherance of your business. So that's where I thought this dichotomy was there. But then that's a policy decision of the government. Now, to what extent policy decisions will be looked at differently by the courts is now becoming a challenge also, because if it is a policy decisions, the courts are very, very reluctant to interfere, to say that no, they have decided that they will not give you this credit. Who are we to interfere, etc. So that's how the approach of the courts are. We are looking at the Supreme Court hearing of the matters in Safari, where in respect of renting of immovable property and then you further give it on rent, what is going to be the view of the Supreme Court? Because I think the Orissa High Court read it down to say that you can't restrict it to this extent. Now, let's see how the Supreme Court looks at it. But then this is where I thought there was a dichotomy between the original intention of the GST and then the restrictions that are coming up. But yes, they have put in place a restriction to say that we will not give you the credit.
Probably, I think we need to look at the observations of the Honorable Apex Court in VKC footsteps with regard to the formula, which was heavily tilted in favor of Revenue at 89.5. And in 47 GST Council meeting, I think adhering to those observations of the Honorable Apex Court, we corrected the formula. The Supreme Court indicated that we don't want to step into the policy making, but we find there is an incongruity. I think you may correct it. The government took it in the right spirit and we amended the formula, which is fair in terms of the proportion of the credit in terms of input and input services. The same ratio, the output inverted tax refund was to be given. So as I think Mr. Shivdas has mentioned, the courts are generally reluctant to get into the things about it, unless it is a violation of the due process and also ultra violet to the Parent Act. Since the amendment has been carried out in this act, perhaps I think we need to look at that perspective. But the point I think what Mr. Shivdas has made is very valid. I think we need to look at the overall objective of the GST and the 100% Constitutional Amendment Act. If you look at the objects and reasons, I think tax cascading was one thing which they said clearly that to another objective, introducing the GST. So you may not find the tax cascading removal in any one of the act as an amendment. In the objection reasons of Unni Amendment Act, this has been mentioned. It's a part of that. And many times the courts have interpreted the objection reasons clause for interpreting the provisions of the law.
No, only. This is the amendment to section 23, where on a compulsory registration, where they have now said that certain persons who are doing completely exempted activities, both in terms of services, in terms of goods, etc., especially agricultural activities, they need not take compulsory registration, which I thought was right in favor of the way the provisions ought to be ruled. Because we thought there was an contradiction between the provisions that said that you should take a registration and the provisions that said you should take a compulsory registration. We are not liable to pay a tax at all. Why put my head into the registration system? So that's what was the earlier views that were there. That seems to be getting corrected by the amendment in the present budget. So this is what I was pointing out. Earlier, there was a contradiction which mandated registration for supply, and now that seems to be removed by means of this section 23. Now, there was one doubt which we also, or people did have. What is the effect of this amendment to section 23? Does it mean that whoever is liable to pay on RCM also will not be entitled to take a registration, will not be required to take a registration? Because there was one of the views that was floating around
In the beginning,
immediately after the amendment came. I said, no, that's not the purpose of this amendment. You see, you don't, if on an RCM basis, if on a forward charge, somebody is not liable to pay tax, then the burden is shifted to you so that you are liable to pay the tax.
and there's a notified category.
That's a notified category. Right. If he is not liable to pay tax, then obviously you will also be not liable to pay tax under the RCM. That does not mean that by virtue of section 23, whoever has been liable to pay tax otherwise under RCM will also not be liable to get registered. That's one clarification which people should have. Because this is one view that was floating around immediately after the budget, that now everybody under RCM need not get registered. We have moved away from all this. Section 23 is that amendment. I said that's not the, you can't expect the government to be so beneficial. That should not be. Now, these are the four sections where the time limits have been amended by indicating that we will move the time limit by up to 3 years. Now, section 37 related to GSTRN 1, 39 relates to GSTRN 3B, 44 is the annual return, GSTRN 9, and 52 is the time limit for furnishing statement by an electronic commerce operator. Okay, sir. Now what has happened in is all the cases, they said that the assessees will not be allowed to file their GSTRN 1 or a GSTRN 3B after a period of 3 years. That's how the sections have been worded. And 73 and 74, which are the recovery mechanisms, do go by the due date for filing the annual return. So if the annual return is to be filed by a particular time, then it go by 3 years or 5 years. And that is the farthest limit by which the adjudication has to be over.
Right.
So 6 months before or 3 months before that 5 years or 3 months expiry is to be over. That's fine, sir. That is, there is no problem in that. Now, the only difficulty is there are a few things which comes to our mind, which we thought all of us also should discuss. Now, in terms of GSTRN 1, you are allowed to rectify it and complete it by the November of the next year, sir. That's one.
30th November.
30th November of the next year. So 17, 18, you can do it by November of 2018. That's one situation that is there. Now, rectification is not allowed beyond that stage. But the section says that I can file a GSTRN 1. I will not be allowed to file after 3 years. If I normally file a GSTRN 1 by, let's assume by the 10th of the next month, etc. And then the rectification also is to be allowed only till by 6 months. And then it has to be done by the November of the next year. Now, where will be a situation where an assessee will be filing a GSTRN1 at the after this expiry of November, etc., up to 3 years. That's one doubt we have. Where will a situation come where they will have to, where you're preventing them from not filing after 3 years? So are we looking at a situation where that you can have a GSTRN1 being filed even after the original GSTRN1 getting filed within a month or so, rectified getting filed by the November of the next year, and then a fresh GSTRN1 getting filed after the expiry of the November, but before the expiry of 3 years.
3 years.
So that seems to be the doubt people seems to be having. Why is this 3 years? Where is this coming from?
One category could be the unregistered person during the investigation
Absolutely.
enforcement proceedings found to have not complied with section 37.
At all.
He would be given an opportunity max of 3 years beyond that.
Beyond that. So therefore, that seems to be in line with all
only
the time limit under 73, where it says 3 years from the date of the annual return. So if that is so, are we looking at situations? What will be the impact of the person filing a GSTRN1, say at the end of 2 years, 11 months, before 3 years? Will he be treated on par with somebody who's filing a GSTRN1 regularly and then allowed to be rectified by the November of the next month? Is he being differentiated by a person who doesn't go through all this, but still during an investigation, they find that he is supposed to file, and therefore he now is allowed to file on to the second year and then 11th month? What will be the situation? How do you treat assessees differently? Is one problem that can come up. So somebody can say your law permits me to file within 3 years. Once you do that, then maybe you can impose a penalty on me, but you treat me on par with every other assessee who has followed the law regularly. So these time limits of 3 years, amending your GSTRN1, 3B, then your annual return, that can create an issues on these points. That's what I thought we should also look at it.
At least this will be relevant for the past cases because effective from 1/10/2022, I think the sequential filing of GSTR1.
Absolutely.
And also the 3B where it has to be preceded by filing GSTR1 has come. But for the past period, yes, Mr. Shivdas, observations are valid because it could create some amount of ambiguity with regard to the 3 years class will override or the 6 months in which the amendment has to happen. The advantage in differently situated persons could be varying. The law could not be.
And also that there is also a provision to say that if you don't file your GSTRN1 for a period of 3 months, 6 months continuously, then the registration is liable to be cancelled. Now, what happens? Suppose you cancel this registration, but then your law says that yes, you will file by negatively reading this amendment. You can get a time limit of 3 years to file your GSTRN1. So, can you cancel this registration? Can you go to the court and say that when your time limit is up to 3 years, how do you cancel my registration today?
No, I think that I would answer that the 29(2) cancellation provisions are for 6 consecutive monthly returns filed. Provision in the GST law, notwithstanding the cancellation registration, all the obligations, including the sustaining liability, will be paid. So a registration cancellation will not prevent them from filing a returns. I think probably that's what the intention is. Maybe the enablement in the GSTN portal, how it is working.
Yes, sir. That is what I was coming to, sir. Once you cancel the registration, then we are effectively barred from getting into the GSTN portal at all.
That's not the law. The law enables a person to file the return for the past.
Okay.
The question is, I think, that is subject to your scrutiny. If the department is agreed with that disclosures made subsequent to the cancellation is found to be deficient, section 61 or for that matter, the assessment proceedings can be done.
Yes. This is 54(6). This is more to be in line with the input tax, the refund of the input tax. Now, earlier the provision said that input tax credit provisionally accepted. Now that provisionally accepted is not there. It's all a self-assessment input tax credit which you take. So that they wanted to prove that the input tax credit provisionally accepted. So that's an amendment that has been made in line with what has happened over a period of time.
Deletion of section 41.
Next. Yes, sir. This is what we were pointing out, sir, that interest on delayed refunds, where earlier it was from immediately after the expiry of 60 days from the receipt of application, you should get the refund. Now, Here they say that till the date of refund will be computed in such manner and subject to such conditions. So evidently there will be a procedure laid down saying that after the 60 days, even if you had given all the documents, but still there is a deficiency memo that is being issued that we expected 1, 2, 3, 4 documents. You have given 1, 2, 3 documents. Fourth document has not been given. Therefore, we are now putting you that you are not given the fourth document. And then you give the fourth document. Will they again turn around to say that no, this fourth document again is deficient, therefore you will get into. So how this the delay in calculating the interest will work out will be a matter of challenge as far as the assessees are concerned, wherever this refund is going to be there. Because otherwise, there are only two ways. Either you reject the refund, then it's a different question. And you go on a litigation and then trying to see whether you're entitled for the refund at all or not. But if you give the refund, and if the refund is spills over after the 60 days, interest becomes automatic. So whether to avoid the interest, whether you could still get into a situation of a deficiency memo so that you don't get into a situation of liable to pay interest can always be a matter of challenge. Because that is one, I mean, the experience of the assessees with the department is slightly in a different manner as far as that is concerned. That's one, sir. Yes. 122 1B, the intention behind this amendment appears to be to make the e-commerce operators more responsible in terms of people who will operate through them. Because once you make an unregistered person supply through you, whether at least the 20 lakhs, and then whether the details given by him is right or not, so that responsibility is on the e-commerce operator. Is definitely a big challenge for the e-commerce operators.
Because they have to take care of the place of supply.
Place of supply, all that is going to be a big challenge. I was only reminded what maybe I am not too sure about the other states, but what the Karnataka government was trying to do with the e-commerce operators here through for the VAT regime, where they wanted to make them responsible for giving details of the e-commerce operators operating through them. And then there was a big resistance from the e-commerce operators because ultimately suppliers would be the persons who are liable to pay the tax, and therefore why should we get into it? Always a struggle, and ultimately I think we landed up in this situation of operating through them. So this liability to a penalty on the e-commerce operator will be quite a challenge as far as the e-commerce operators are concerned. They have to be doubly be careful to say that the details given by the actual suppliers, which in turn is carried forward by them through the 52(4) statement, all that is right. If there is some problem, then they will also land up in a penalty. So that's one responsibility for the e-commerce operators. 132, as you rightly said, sir, decriminalizing certain offences where normal offences in terms of obstructing or preventing an officer in the discharge of his duties. But these are all relative in terms of what somebody can view as obstruction in the discharge of his duties, etc.
One more reason for this was probably all these are all offences already punishable under IPC. There's no need for a separate provision in the tax law for these offences. So absolutely, that's one of the reasons.
This compounding of offences where the amendment has been made to make it more attractive for companies to go in for compounding. Too early to see how compounding will be attractive in the GST law because we are still in the early stages of finding out where companies are in terms of the GST law. But otherwise, these are all making it more attractive so that it's easier for them also in terms of putting an end to their litigation. So that should make it easier for them. 158A, consent-based sharing of information shared by a taxable person. From a very, I would say from a moral perspective, I think this section will serve its purpose because you can't be seen as giving different types of information to different departments at different points of time. This is a dispute which we used to have maybe 2-3 decades before, where assessees used to give one information to the electricity department, one information to the excise department, one to the VAT department. So all the three were completely different information. So one to the income tax department. So at some stage, all the information has to be collected and then given, and then we say we gave it for different purposes. You give a different stock position to the bank, and then so all this I think is ought to be regulated by these mechanisms, so that you are more you're uniform in your details. Whether you're correct or not is a different point, but otherwise in the information which you give to the different departments, you have to be uniform. So that is, I think, it's a good information sharing that is being done. And then, as sir was pointing out, this is going to help MSMEs in respect of showing their credibility to their lenders, because if you
And
are
also the discounting.
And
For
also
example, if
discounting.
there is a tax as we paid GST, they have to borrow the loan, or the amount can be taken and paid, and whoever takes the bill, the discounting platform. This is basically a discounting platform.
Potential investors also.
Absolutely. So that gives you a different, your credibility has a different meaning to the lenders in respect of especially the smaller companies. Yes. This is what, sir, that entries 7 and 8 of Schedule 3. Then, of course, you clarified that this is meant only for specific situations. And as it comes out, we will see how this comes in terms of the rules. Yeah. This non-taxable online recipient is one amendment which does bother me, sir. One is that you have said, yes, any unregistered person receiving online information, that is okay in terms of unregistered person, etc. Now, who will be the persons who will be called as unregistered? Whether everybody will be considered as unregistered? This can open up a huge. Now, so long as the person supplying from there has an Indian office or an Indian entity, there is no difficulty. Then for an Indian entity to you, it becomes easier. It becomes a local supply. But if we doesn't have, and we have quite a number of examples of that. So then how do you look at this amendment? That is one thing which we'll have to really look at, because you have removed the other than profession, etc. has been removed. Now, more important, go to the next slide, please. If you look at the definition of OIDR, I thought the crucial expressions in the earlier definition was minimal human intervention. There was definitely a crucial expression that indicated what all could get covered and what all could not get covered. Now, the moment you remove this minimal human intervention, now it becomes essentially automated and involving
digital supply.
The insurance absence. So therefore, it could cover any situation. Now, this definition is quite a wide definition that has been amended. And in respect of the technology transfers that take place these days, the information that comes through all these systems, etc., this can open up a huge impact in terms of the applicability.
I think speaking for what was the government concern, at least to what we had looked at. See, the payment gateway data was compared with the declarations made with regard to the OIDA, especially on the non-registered persons who have been making remittances to the overseas suppliers. That data, RBI remittance data, the income tax 15, maybe that data, and the payment gateway data, including UPI and other things, there's a huge gap is being thrown out. After providing for adequate normalization in terms of the non-taxable sectors, etc., still the gap was very wide. So the government is the view that there is a lot of leakage happening on this on account of this. After all, it is a cross-border B2C transaction where individuals are making the remittance of payment. And the purpose of payment is captured in one form or the other because of the regulations available in the allied laws. And the payments made to the proportion of the tax collector from that was very less. And that was basically online data access retrieval. Basically, there is only one single authority for the whole of the India. The Bangalore West Commissionerate is the only authority. There was suggestion that I think the states do have a concern that the recipient address should give them the IGST fund settlement. The accuracy of the data captured. And also with regard to, there are concerns about that. This amendment has been made in that backdrop. Probably, I think removing those perceived areas where somebody could be interpreting it and doing it. For example, we have removed the government, local authority, and all those things. We have also positively said, the government has positively said that a TDS deductor, the TDS collector, would also be a registered person for this purpose. So it's in a way to bind everybody who has been an online recipient. But as Mr. Shivdas said, that by removing the minimal human intervention, everybody by default will fall into this, and probably it will be a forward charge. In many cases, it would have been otherwise reverse charge in this platform.
Because to be very frank, sir, most of my opinions are based on this minimal human intervention. So that is
Some drafty guy would have got hold of your opinion.
That's fine. Okay. Yes. This I thought was the amendment that was made, surprising amendment, only to transfer all the pending proceedings before the erstwhile authority for advanced ruling and the CSTA to the, especially on disputes relating to this stock transfer, etc., from one state to another, how this will happen, etc. That I think will come back to the CSTA. Whether it will come to the respective benches or it will lie with the bench in Delhi, etc. That's a matter of concern. But otherwise, this is a surprising amendment that has been made.
That would, I think, would fall within the domain of the president.
That's it.
He may constitute a bench or he may give it to a.
That I thought was our reading of the provisions. Our concerns also, I expressed it as and when I was indicating these things. Yes.
And that's typical of Shivdas' clarity and lucid expressions. I think I would say that. I think.
Thank you, sir. Thank you so much. As I mentioned earlier, I think the highlight of this discussion is definitely the background or the backdrop for the third schedule amendment, sir. That is one. And maybe the interest piece as well, as to how the interest will get computed and when it will get paid. Sir,
I also want participants to see this, Badri. See what happened. The government also is governed by the oversight body's observations. C&AG has brought out so far about 3 reports on GST. The first one was during the transition. The defects and the shortfalls of the GST, the registration, migration, and also the Tran 1 issues. The second report said that in spite of the GST being there for more than 3 years, there has been no compliance in terms of audit scrutiny, and the government is failing in ensuring that it is put in place. The recent report which has been submitted, I want some of you to see the depth with which the C&AG goes into some of the compliances. They call it a subject-specific compliance audit. They've taken up 2 topics. Therefore, the third time they picked up the transitional credit issue. 1,76,000 crores for the transitional credit. Now, to the center account, it was falling almost about 1,07,000 crores out of that 1,70,000 crores. So the C&AG has looked into how far this verification has been done, whether it is in Tran 1 or in Tran 2, and what were the compliance gaps. Similarly, on the refund, the subject-specific compliance with refund, because refund is an automated route, and C&AG fully acknowledges that refund should be given to an eligible taxpayer as per the law, with no time limit, with no time, 7 days provisional refund. They've come down heavily on the department where provisional refund has not been given within 15 days, where there was an RFD 04 issued, but RFD 05 was not issued, and things like that. Now, they also come up with recommendations under each of the topic, the policy prescriptions. Now, by looking into the C&AG report, one will be alarmed at the way in which the granularity of the data is looked into by these oversight bodies. It's as much a challenge for the government as the taxpayer would see, because the visibility of data is something which was not there earlier. Now, that is where the government is also taking some of those steps to streamline the processes. Sometimes it could be adversely affecting a genuine taxpayer. But the problem is that until we fine-tune the risk and target it better, some of these provisions would continue to be there. I think that is where, when we introduce the changes in 37 and 47 GST Council meeting, 16BA, where it was introduced, is the government is restricting the credit in those 6 categories where newly registered person, things like that and all. But on all these things, the government has been very conscious, and that's where I think the budget was announced even then at that time. The chairman and the revenue secretary has gone on record, that it would be a system-driven approach and rather than a discretion-based approach. The system will flag and system will probably in the years to come, like income tax, provide for a compliance portal. All that exception handling will happen in the compliance portal between the taxpayer and the portal with a view availability and assessing jurisdiction. So most of that should be automatic. For example, revocation of cancellation. Now we have brought in automation route. Cancellation was done in the automatic route. The FM was very particular that revocation should also be an automatic route. The moment somebody comes and forward and files those 6 returns, that was a concern for you to cancel the registration, restore it immediately. And what happens with regard to the disclosures he has made, that's for you to scrutinize and take whatever risk parameters what you will have assigned on that. So more and more system-enabled processes, which will cut away the discretion. But that will require a lot of discipline. That's where the compliance would look very heavy today. But as we go further, probably things should look better. So my suggestion to all the participants, do this amendment to Section 54, what Mr. Das has presented it, is from that recommendation from the CNDG. For making recommendation, they have brought in a lot of data and the deviations and the shortcomings pointed out on the tax administration in not preventing some of the refunds happening in time. Or maybe that somewhere the interest exposure to the government is huge, but you didn't show the alarcity with which you ought to have been doing it. It's from that context. Probably the manner in which it is prescribed will also, according to me, will be by rule and also circular, which will have the ratification of the GST Council. It's not going to be the official part of it. It's going to be ratified by the political executive. So you will see a fair amount of, I think, balancing act between the aspect.
Sure, sir. So there's one thing, probably moderating the session, I'll take the privilege of asking you a few extra questions. So one is, we did speak about this e-commerce operators, where we have the section 122 also, which talks about penalty, which, which a plain reading is indicative that it pushes the onus onto the e-commerce operator to ensure why the supplier is really not registered. But the other thing that I hear, of course, secondary sources of information, is that though I'm going to be that unregistered person, I will still be in the radar of the GSTN because I will have to seek something called an identification number, which will be the basis based on which the e-commerce operator will onboard me.
Yes.
Will onboard me. Sir, anything on that, sir? Maybe that will kind of give the comfort on, the penal provisions that are currently there.
I think, Badri, I think that has been well deliberated upon, and that's one of the reasons why I think the rollout from 1/1/2023 has been postponed to another 8-9 months, because the GSTN will ultimately look at the category of persons who will be exempted from registration requirements, but still will do the business through an online operator. Basically, the proposal is like this. There will be a unique identity number given with the PAN reference. So that will help the government to seek an assurance from the online, from the GSTN portal, if a particular PAN holder is doing transactions through multiple online vendors. Aggregating the turnover, all India is possible. Another aspect which was flagged by some of the states, it was a part of the deliberations of the 47th GST Council meeting, is that you can see from the minutes of the meeting of some of the state finance ministers, what happens if the same family multiplication happens. The same family, husband, wife, son, daughter, brother-in-law, everybody will have one registration, but they will continue to do. Thereby, they are circumventing the aggregate turnover being captured, for which the revenue secretary has replied to the minister during the course of the meetings. It's a part of the agenda, so that's why it's in the public domain. Is it even in a physical environment that is doable? Absolutely. It bounds to happen. But today with an online, we have all the more validation with regard to the principal place of business, the constituency of the business, the PAN mapping with regard to their dependent family member PAN, which is the income tax system can easily decipher, AI. With all these things, it will be a better position. So such of those misuses are easily detected and dealt with by the tax administration. So that apprehension was removed. Now the unique identity number with multiple operators aggregation of the turnover in an all India basis would give. The only thing is that the challenge will be, if I am a person having a registration as an online seller, an unregistered below threshold person, I will not pay tax, but I will be operating through that. If I have multi-state presence, so long as I am not crossing the threshold of 20 lakhs or 40 lakhs or whatever it is, the requirement is that that unique reference will have to be state specific like registration, or it should be an all India unique number. How does the information exchange will happen? Those are the detailing which the GSTN is working on that. But let me tell you that the e-commerce operator would not be put into a situation where he is asked to do an impossible monitoring part of it. That unique reference with the PAN, I think it will be available for an e-commerce operator to access it from the GSTN portal to say which are the states in which this person is registered and which are the principal places in those states he has registered will be there.
Sure.
That would.
Sure. That's very heartening to hear, sir, because as you said, it is going to be impossible for an e-commerce operator to understand why a person is possibly not registered. So maybe one question on what you said about the settlement commission, where we said, the 9 months time limit has come. So, I mean, very well that you mentioned saying, it is not very attractive today to get into the settlement commission, but having gone there, if it doesn't happen in 9 months, it is like, for whatever reasons, if it doesn't, then it is back to square one as far as the applicant is concerned.
With all your arguments against you.
Yes. So is there
You say
anything,
the application against you?
is there anything that the members have to be?
No, you'll have to be. See, there are two ways. You have to take a conscious call. In what cases you go to settlement commission and what cases you don't. That's very clear. If your facts are bad, if you have done what you should not have done, then there is no escape from the consequences. Better to go for a settlement commission, accept what it is. You are no way worse off, even if you are back, because you have accepted what it is. Okay, so you are only getting into a penalty where there it is 10% penalty. Here it is maybe if you are paying up within 25 days of the order or something, 25% penalty or 50% penalty. That's one call which you will have to take. But that's a conscious call which companies have to take. When I go to settlement commission, how good or how bad I am in terms of my facts, in terms of the position in law. If you are in a position where you can argue saying that I did not do this or I am not liable to pay tax, I think you should take a call. No, I will litigate and see what is to be done. That's a conscious call which companies have to take.
Sure.
It's a very attractive proposition, because why I'm saying this is, as soon as a notice is issued, normally there is a tendency on the part of even the officers to say that you have an option to go to the settlement commission. You go there, accept it, and that's an option. I mean, that is there as a revenue officer, they are saying it and they are saying it. But a company has to take a commercial call on all this, conscious call.
I think Badri just wanted to kind of say, is it the nice way to reduce the number of applications before the settlement commission?
Well, no, I think I would say like this. You look at the way in which our national litigation policy is drafted. Alternative dispute resolution is one of the things which the government has been recommending. You look at the judiciary now looking at deciding matters using the out of court. I think the National Legal Authority, which is headed by a Supreme Court judge, I was listening to him, Justice U. Lalit, when he was the then judge before he becomes Chief Justice, and one of the functions. Is it the amount of disputes which has been settled outside the court by using that forum is phenomenal. And the judiciary looks at that, too much of cases, too much of clogging. I'm sure I think Shivdas will look into some of those things. Do not get the attention of this High Court, albeit there is a pressing need for the court to look into, because there's no other effective remedy available, but the court will not be in a position to do it because of the huge backlog. Alternative dispute resolution is a part of that. But what is the concern for us? And that's what I think basically the Income Tax Settlement Commission was closed. So the draft review panel and alternative things, they are experimenting with that. In fact, the government is also at some point of time is looking into the mediation and the conciliation route for dispute resolution. Particularly, you have looked into the income tax point, transfer pricing, even this budget as
The map is there.
the time limits and all. The discipline with which, because everybody recognizes litigation is a high cost proposition. A lot of things, the government being a compulsory litigant, putting the monetary limits, a lot of things have been streamlined, apart from the amnesty schemes, etc. But still, the disputes are overwhelming. One of the criticism in this budget, I think I heard a couple of panelists talking about, you see, the litigation, the mounting litigation is continued to be a concern, and why there was no amnesty, especially to the new GST where people have not complied unintentionally, whatever it is. The alternative dispute resolution is there. Now, settlement commission in indirect taxes basically would be very, very important, because here the incidence is actually borne by the person who is coming to settlement commission subsequently. The chances of he recovering it subsequently is very, very limited. So we need to be very careful about it. Perhaps the 9 months limitation, what it has been put in the Customs Act, according to me, was there in the excise and service tax.
It was.
It is only brought in here.
Yes, sir.
And the only thing what we have now done is that the 9 months will be committed in respect of those cases which are pending as on date from the date of the presidential assent. It may bring in some discipline in terms of quick disposal. But the challenge, as what Mr. Shivdas said, with regard to a person approaching settlement commission, and by the conduct of the settlement commission, it didn't get disposed of within 9 months or the 3 months extended period, whatever it is. The person has to come back to the adjudicating authority. He is in a disadvantageous position. There's no doubt about that. But for that, the answer, what he has said, is the only remedy. It's a conscious call the business will have to take. That's absolutely.
So on the theme of litigation, a couple of follow-up questions, since you touched upon it. There was an expectation of an amnesty scheme when both on customs as well as GST front. When does was this a part of a discussion, you reckon, or when does the government consider an amnesty scheme? Is it linked to revenue collection, that when revenue drops, you throw out an amnesty scheme? That seems to be the outsider perspective. That's one. Secondly, in income tax, what they have done is a similar clogging of appeals at the first appellate level, commissioner appeals. So they have brought in an additional authority of joint commissioner appeals, so that they increase the
Going to the pre-2002 regime.
Right. So which was there probably in the sales tax regime.
Even income tax had it before 2000.
Pre-2000. Okay. So that in a way we at least keeps the cases moving rather than getting it clogged at one end. And on the contrary, GST, we are having a problem with the GST appellate authority, appellate tribunals. So when do we see, because there was no mention of GST 80 at all, either in the budget nor in the GST council meetings. So both on amnesty and GST 80, what is your sense?
Well, I think all of us would have listened to the speech of the budget by the finance minister. Not a word about the GST.
So that's because the GST council has not discussed that group of ministers discussions. That's the whole problem.
So the first point, insofar as the amnesty schemes are concerned, why there was no amnesty in the customs, there was as much of discussion in the public debate. See, let me tell you, the entire process of budget making is done in a manner of a consultation. It starts sometimes in the month of September, October,
Right.
And it goes on up to December. Not only the stakeholders, industry bodies, trade associations, all concerned ministries. After the consultation is over, I think with regard to what to be taken in, what to be not to be taken in, will be decided by the finance ministry. So there was huge speculation going around that 38,000 crores of arrears are there in customs, and therefore I think matters related to the classification, country of origin, etc., should be given amnesty. The serious offences like smuggling and outright smuggling case should be avoided. This all was in the public domain. It was not necessarily could have been a part of the government decision or thinking also. It's just that in the press, and as much as you have read, I have read, I think it could have been just a speculation and thinking on that. Now, when the SVL DRS was done, at least on which everybody is knowing, it was a conscious decision to extend it only to excise and service tax because it was being replaced by GST. One of the reasons for SVL DRS to come with such an attractive proposition was, in terms of the setup, was to kill the legacy and then move with the new slate. Customs is an ongoing legislation. And customs do have challenges in terms of some of those offences which are very serious in nature. Smuggling or maybe domestic relation with regard to socially not desirable imports, etc., etc. So therefore, I think it was in the public domain discussion, but I think the government did not have any such idea. Obviously, that's not there. Coming to the second part of it with regard to 18th of February, the GST Council is meeting, the 49th GST Council is meeting in Delhi. That's there as a part of the official announcement yesterday. So there are two agenda points, I think, which is likely to be taken up. One is on the online gaming. The second is with regard to GSTAT. GSTAT tribunal, I think there's a lot of misgivings being talked about, that there is a difference between the center and the states and things like that. I think the GOM report has been already submitted to the government, and some of them were there in public domains, where some experts, etc., all those things. From whatever I could gather from the public domain, the Deputy Chief Minister of Haryana has recommended a structure which is in consonance with what it was earlier, but duly taking note of the observations of the Honorable High Court and Honorable Supreme Court and Revenue Bar case and Roger Matthew case, etc. Because today the GST Council will have to tread the path of designing a GST tribunal, keeping in mind those judicial observations. Because already 5.5 years, we can't wait for some more time. Should this structure be again taken to a challenge, and if there is a judicial intervention into that. So the government as well as the GST Council is conscious of that. But the contours of recommendation which have been made are not going to be directly in conflict with what those observations have been made by the honorable courts. So given that background, and there is a broad consensus, I think likely that on 18th February decision, some decision would have to be taken. But the challenge would be that amendment to bring in the tribunal in terms of whatever the design structure, qualifications, search committee, service and conditions, etc. It has to be a part of 407. That will require an amendment to the GST Act. Now, there is an optimism that let GST Council look into this and bring in this, and an amendment to the finance bill can be still made.
True, sir.
Normally, you don't do this in amendment route,
Right.
in this format. But 19th February, decision of the GST Council will decide. If there is a consensus and if there is a view taken by the government, an amendment to the finance bill itself can be brought in to introduce those sections, and the parliament can approve, and then later state legislature can do. If that doesn't go through, then it has to be a part of the finance bill of 24. So 18th February gives hopes, and let us all pray, because 5.5 years the taxpayers have put into a lot of difficulty. The government is aware of that. The interest liability should, even 10% of that disputed amount is upheld, it is going to be the cost of the taxpayers.
Cost of doing business.
That's what I said. So the government is fully conscious of it. The last time it could not be taken up for the simple reason, the report was circulated to all the state governments, and the comments from some of the states have not come. And since it involves interstate and the federal structure, there has to be a proper appreciation of that, because at a political level, there has to be consensus in the broad things. To my mind, I think the GST tribunal structure, design, and the constituency, I think it should see some solution. We have the benefit of looking into the past amendments, the challenges it met with in judiciary, also the urgency for which it has to be created. The government is conscious. Now that the GOM is there, it's a matter of a decision the GST Council will have to take.
Now, with your permission, Badri, can I?
No, please.
A couple of points, sir. The first point is on ITC restriction. Now, a new restriction has come with the, by bringing in the CSR as a part of that blocked credit. While it may, in your initial remarks also, you mentioned that it is going to impact the beneficiaries rather than the company, because monetarily the company would have set a certain target mandatory requirement under the company law. So obviously this ITC component also, the GST component also will become part of that expense. So it's not going to impact the company as such, but it will impact the beneficiaries. But why is this penchant of the government to restrict input tax credits when the definition of input and input services is wide enough to cover any procurement meant for business or commerce? And secondly, when you look at the global environment, there is no such restrictions that you see as we see in India. We are still continuing with the age-old mindset, and which has come from the MODVAT scheme into the SENVAT scheme and also from the VAT regime. We are still looking at certain transactions as not related to business. And that is also impacting the refund because, we are one of the Infosys being the major refund claimants. We are ending up with litigation on many of these aspects. While 17.5 clearly shows that specific things have to be restricted, many of these things are coming under 17.5 through an indirect route, saying that, this is not meant for business. So that is something which is bothering. And secondly, on the deficiency memo, this, the refund part, many of these authorities at the lower level, they are not following the 7-day rules.
Okay.
Let me be very honest on that. While they are adhering to the 60-day norm, in our case, because we have major claims. So none of them are following the 7-day rule.
But that is visible.
Secondly,
That data is visible. The moment the deficiency memo is issued, it is issued through the RFD route.
and the deficiency memo, I'll come to that.
Deficiency memo will be the RFD 3.
I'll come to the deficiency memo, sir. The deficiency memos, ideally in 125 and one read with 135, you have identified what are those specific documents which have to be provided.
Annexures.
Now, in the deficiency memos, if you look at, they are including all and sundry documents, whichever comes, whimsically to the authority's mind. They are asking for purchase orders. They are asking for, say, service agreements. They are asking for income tax reports, whatnot. Everything and anything which it comes to their mind is coming into the deficiency memo. And if that is the case, then this sanctity of the exclusion of deficiency memo timeline is not helpful to the SSE or the taxpayer. So these two things, I think, and of course, there are a couple of other things, but I would request you to.
Both points are very valid. I think insofar as the issue with regard to the credit restrictions are concerned, I think while we drafted, we started with the word subject to such safeguards, conditions and limitations. We had looked into that. And there are arguments, both sides. It's a vested right and it is not a natural right. The business would argue that, treat any business expenses and if any tax has been paid towards that and if it is denied, it is to that extent, I think it's not a seamless flow of the credit and it is contributing to tax cascading. Well, I think a lot of debate is happening. We had looked into the hard data with regard to 17.5. How much is the block credit? Unfortunately, we didn't have for the early period. Now we have put a line item separately into the amended 3B format. The reversals on account of the block credit. It would not be very high in amount, but that would be one of the inputs for the policymakers to take a call. Is it worth cost benefit analysis in terms of the difficulties in terms of keeping an account and reversals vis-a-vis what the government gets in terms of the revenue? The one factor for blocking the credit, I would say, is primarily driven by what you rightly observed with the legacy approach. Two, it's also revenue consideration for the government. That's where with good revenue growth and also the industry making its voice, I think perhaps it has to be at a very informed level at the government that it doesn't really augur well for the business to prevent the credit flow on account of these things. In fact, when this amendment was made in 17.5 FA, the first thing came to my mind was, why is this another restriction on 17.5? Then the logic given to me was that it's an income tax treated as an expenditure deductible on spend. So we have aligned it. Then the question again further came into my mind was, GST is a transaction level tax.
Not at an
And at the entity level, income is earned on which certain deductions at off is claimed. The fact that this is mandatory, for example, we have gone through the entire GTC judgment to what is a canteen service and all those things. And there is equally a convincing argument, but to say that if you are mandating in law to business to income, to direct in one hand to do this, another hand say that no, this is not to be taken as a credit is, I think it can be done. But block credit is a matter of concern. The concern is expressed by number of representations before the government. Let me tell you, I was in the board. We have been getting in any pre-budget 17.5 used to be the one pain point right up to the PM level, Niti Ayog. A lot of references have gone, and those are also referred by those authorities to the Finance Ministry to examine and consider.
to add to this point, sir, if you look at companies like, in our organization, we have STPI units, we have SEZ units, the same line of business. The business remains the same, but the status of the entity remains different. So for the STPIs, we have the 17.5 restriction, but for the SEZs, there is no restriction. You have the upfront exemption.
Upon more on
Now,
The act is different.
No, I do understand, but look at it from this angle, sir. From a business standpoint, you have the works contract services and the construction related services, 17.5 C and D. In fact, long ago we had discussed on this separately also, sir. In a FICCI session, we had done that discussion, and a couple of times I had expressed that to you when we had met in the board also, and I have given that representation separately. 17.5 C and D primarily brings in a restriction on investments, because the moment I have to invest something, there is a work contract service which I have to claim, which I have to procure for my construction of immovable property, whether it is for greenfield or brownfield expansion. And all the goods and services which I procure are completely becoming a cost to business. Now, if people wonder why private sector is not doing much of investment, this could be one of the reasons. There is 28% on cement, then 18% on iron and steel, paints, which form a major part of your construction cost. So this is one thing which we have to look at. And second part is there is no definition of immovable property. So you do not know how is immovable property defined. So that is one thing. And the other part here is some of the vendors, small scale, small time vendors are still in the VAT regime mindset. Any AMC is identified or classified as 9954. The moment it is classified as 9954, because the moment it is AMC, they are coming up with that works contract mindset under the VAT law.
But the
So they are classifying, it is only for immovable property. But unfortunately, they are doing so. This 9954, the moment you pull out that report, from the department side, you will see many of these 9954 and straight away we get a DRC1 or So we have got that. We had to explain to the other vendors. Then we have those rejections also now which are pending in appeal. So this is one thing which I think.
I think the point is well taken. The block credits is an issue on which I think the industry will have to continuously engage with the government. But as I told you, I think it will, by and large, will get addressed over a period of time with the revenue getting stabilized. And also the fact that there is need for looking at some of those removal of the credit, because global practices are well known. In fact, the UK VAT regime, even the reverse charge payment is made through the input as credit. We are aware of that, but those are revenue considerations. We need to keep it in mind for some time to come. But block credits is an issue on which industry should continue to engage with government, is what we have felt it about it. Coming to the second point with regard to refunds, you look at 125 circular and followed by the amendment circular. No other circular would have been so elaborate and comprehensive, taking care of all the scenarios in which refund and what requirements, like an SOP and a guideline. Any amount of policy SOP can be prescribed, but implementation has to be monitored. The GRC is something which government wants to be very proactive. See, what happens, Badri? The GRC takes up many policy related issues. And it is easy for the government to say we will refer to the GST. Operational issues should be taken very specifically. Again, there would be a resistance to say individual cases we would not like to do. We do not name a company, but these are the specific instances where refund has been denied by raising these things which are outside the instructions of the system. And there has to be a resolution found on that. So, many times, unfortunately, GRC is considered as a panacea for all ills and the policy-related matters are taken. That in any case, you as an industry body or an individual association can always head to the GST policy wing, GST council. You don't have to require the blessings of GRC to take up your cause. GRC should be a forum in which all this type of implementation failures and the difficulties should be very specifically done. And when minutes are recorded, if you still that resolution has not been correctly addressed, you must seek an addendum to the resolution. And if it is not happening, you must escalate it.
So the more dangerous thing that is going to come up is in the Desh bill, where zero rated supplies are going to be abolished. So there is a proposal because 2 times we had interaction
That
with
is
the
in
additional
the pipeline. I don't think government is very clear about it. No taxes will be exported.
Sure, sir.
17
I think that's very clear.
5 doesn't apply to your export at all. So whether it is, in fact, we are looking at deep export. It's like you have said about STPI and EOU, those are all sunset schemes. But I think the Desh will not be going more than what it. In fact, it will be a much better version. There is a lot of discussion happening on that because ultimately we realize one thing: as we are getting into the PLI and other things, our manufacturing is 1.6%. There's one of the criticism in this budget is where did your capex expenditure ultimately resulted in terms of progress in manufacturing? It is not reflecting in terms of production in steel, iron, and where is that it has gone? Ultimately, we are looking at when we are going for a manufacturing, we are not looking at only the domestic consumption. We're looking at things. So be very clear on export. I think certainly there won't be any restrictions playing upon that.
Okay. But a couple
I think on the PLI, sir, the number speaks for itself.
You saw the mobile numbers Madam has mentioned about in the budget.
There is a report which has come along with this budget, which is implementation of budget proposals. The first of the list is PLI. I think about 12 schemes, more than 3.5 lakh crores has got invested, and more than 4 lakh crores is the incremental turnover in less than 2 years. So that I think is good.
It's a performance linked scheme. So obviously, it's a self-regulating. You get to get the concession only when you reach the threshold. And that threshold will have to be a mix of domestic as well as export market.
True, sir.
So obviously the Desh bill will not work on that. You don't have to worry on that part. There are interministerial issues. But
because when in our interaction with the Additional Secretary of Commerce recently, and also with the Noida Development Commissioner, and of course other development commissioners, this has become one of the agenda points for a discussion, sir.
Sure. Maybe we'll take that, Ravi.
Good morning. We had an excellent session. I'm hearing deep insight after a long time. I missed the last session and even
Shivdas is there, I believe.
Yeah.
But more than half of the world takes it on that. There's no issue.
So I got a couple of points. In fact, GST as a legislation has been a success compared to other legacy legislation because the experience of the past and the automation is more or less settled, but still there are some pain points. One is, I think, advanced ruling. Advanced ruling is a farce in the GST scheme of things. Home decisions are, I think, totally wrong. Just like corporate office and the decision in Bangalore, advanced ruling.
In case of
Columbia Asia. So that is one area where we need what you call redressal. Second is the what you call as others pointed out on the appellate tribunals that has to be constituted fast. Third is you said the intention of the government is to bring down litigations. Unfortunately, we are seeing settled cases being appealed, legacy cases, I'm telling you, appealed by department. They are now it is coming.
So I think, Ravi, the point which we are looking at advanced ruling, no doubt there are conflicting rulings. But I would say one thing, close to 4,000 advanced rulings have come in the country. I think the Shivdas has appeared before us in Karnataka Advanced Ruling Authority. You can hear from him how much seriousness with which the entire proceedings are conducted. It is almost on par with tribunal. And generally someone thinks about that. At least at the appellate level, there is. But one positive outcome of the conflicting advanced ruling is an input for a policy maker. Now, liquidated damages today.
But I want to take the.
You see, look at the positive outcome of that. How much of litigation we have killed in this country by that elaborate circular which has come. Now, if you look at the head office, branch office discussion, which has been a part of the Columbia Asia and subsequently the Maharashtra advanced ruling, it is engaging the attention of the law committee for the last about 1.5 years. Intensive deliberations. Whether IST should be considered as an optional, whether the cross charge where cost allocated, it should be considered even as supply, an invoice raise should be treated as a supply because that's how Schedule 1 talks about related party transaction without consideration. The solutions are yet to be arrived at, but these decisions do precipitate some of the issues for a resolution. While I agree that individual businesses may suffer on account of the conflicting rulings, some rulings are indeed, I think, at the easy because the tribunals are not there, so you need to knock it somewhere. And also some of the places advanced ruling is always available for you to challenge before. The party concerned, it cannot be a binding precedent on others. It's only to the party concerned. And that party has got 226. And courts have interfered fairly in advance ruling where they have found that. Quite a lot of them have been set aside in Bangalore. In fact, I would say the National Advanced Ruling Authority, what was contemplated is not yet constituted. Perhaps creating layers and layers is not a solution. We are looking at the Chief Commissioner and the Commissioner Commercial Tax as the members of the appellate ruling, which is the highest authority in the state. And I would tend to disagree that all of them are very perfunctory. Some of them are well-reasoned orders. Some of them are very well-reasoned orders. For example, the case Mr. Shivdas has won with regard to Premier Sales Corporation. The moment this judgment came, I was a member GST at that time. It came to my notice immediately, and then the industry representative, I don't know whether you were a part of the NASCOM or something like that, somebody had come and told us that this is completely upsetting the apple cart with regard to where a coupon is being taxed twice at the time of redemption and at the time of transfer. That set us into thinking about, yes, we have defined vouchers, we have defined time of supply, and we have defined time of supply for vouchers redeemable for services and goods, and we looked at international practices. And we have realized that there is something which we ought to have done in terms of determining the value for these vouchers, because we are ultimately capturing the value addition between a B2B. Right. And I see in any case, the redemption, it will be taxed at the time of redemption into goods or services. These things do throw a lot of light to the policymakers. Let me tell you, at any given point of time, the Law Committee and the Fitment Committee looks into hundreds of things. In Fitment Committee, fortunately, you have a very transparent way in which what are all the recommendations came for rate changes or concessions, exemptions, review, what was accepted, what was not accepted, goods, services. There are 6 schedules will be given in the agenda to the minutes of the GST Council meeting. In the Law Committee, unfortunately, the transparency is not there. What proposals came in and what was decided and what is the rationale. Some of them which I mentioned now, you would have felt that the amendment to 80A is something which is like a monster. It's not so. We had a compulsion because in Flamingo and Sandeep Patil and Cochin International Airport, we had an adverse decision against us. We provided a solution at that point of time. Then we realized that that solution is not in alignment with the zero rating things. So we have refined. Over a period of time, we learn on that. Advanced ruling is something which I still feel at an advanced ruling authority, a proper representation and proper facts. And some of them are very, very path-breaking.
So in fact, the chamber is doing a one-day session on ease of doing business. India has moved up from 140 plus rank to 77th rank. But one area where I think India stands back is on the litigation.
That's correct. And the second part, Ravi, you said about the GST is settling down and probably it's happening on the electronic platform. The amount of challenges in aligning the legal provisions to the IT is a very huge issue for us. Now we have enabled that 4-digit level reporting and 6-digit level reporting. Though it was in the law, it was not enabled in the GST. Not many taxpayers will know that there will be a validation not happening for 1 year when the law was enforced that 4 digits should be manually reported. But a lot of handholding is helped. In fact, the interest calculation now with 88B, the type of response the government comes out with an industry problem. That's what I said. The best way to engage with government and the GST Council is to bring out a very well drafted representation with the arguments and justifications. And you are not only dealing with officials, you are dealing with every state minister. And the GST Council consists of some of the very erudite political leadership.
Sir, a couple of more points. So one practical issue is, I think, many of the MSMEs file return quarterly. Due to large companies, what they're having is they are denied credit unless the supplier files the return.
STR1.
So there is a contradiction because they stop the credit because of automation. They can't look at each and every vendor, whether he has filed return or follow up and all. Many companies, including my S12 company, has done automation.
IFF is not mitigating that.
No,
because we have only provided, correct me, Badri, if I'm wrong, that quarterly filing monthly payment. The monthly payment has 2 options, one on a presumptive basis, one is on that, and whatever short payment has happened without an interest accrual, the third month you make good on 25th, no interest carved on.
Yes, sir.
Am I right?
Yes, sir. Absolutely.
The IFF upload is automatically auto-populated into GSTR 2B, which can be offset in 3B.
Yes.
No,
Many people are not aware of because they're filing only the GSTR 1.
No, the point is that, the vendor education by a larger company is very, very important because the IFF
Cannot-
facility only for benefiting the large entities buying from small vendors.
Because initially the flavor was that is the buyer going to be kind of discouraged from dealing with the smaller vendors? I think that has got addressed with the IFF.
No. IFF is there, but many are not aware. Second is, I'm telling you, if the terms of payment at 30 days or 40 or 60 days, so he gets payment only after 90 days, sir.
That I think the government is trying to address it in other means of that.
Because of the discrepancy between dichotomy between quarterly return and the mismatch of
The two things which the government has
I know.
decided
Right.
that without payment of tax, no filing of return. I think after 5
Payment of tax is done, sir.
1, 2, no credit without the money coming to the government coffers.
No, my money is coming. The thing is, at least some what I call thinking on that, because it reflects in the buyer's credit to be only after the vendor files his returns.
Sure. Ravi, if I can just come in at this stage. Sir, we'll discuss about the budget. Maybe we'll request another discussion with him for non-budget related discussions.
All the big points.
Next question to only Shivdas.
Yes, sir. I have two questions on this budgetary. One is 122 1B, the more responsibility on e-commerce operators and a penalty provision of 10,000. Is it 10,000 per instance or per vendor or flat for the e-commerce operator?
Per violation.
Per violation. Yeah,
Per
logically, yeah.
Okay.
It's like on the lighter side, sir. I don't know whether it is true. I've not seen the government document, but I saw it on WhatsApp yesterday. I think there is some, the helmet rule for two-wheelers in Karnataka. I suppose every signal you cross or everywhere it is captured, that many times the penalty will be levied every single day. It is not once. It is not once per day.
They can 50% concession on the penalty.
To be very clear, when it says 10,000 rupees, DPN sir has been magnanimous to say it is 10,000 rupees per violation. It can be 10,000 rupees per violation per vendor. It can be 10,000 rupees per instance.
For instance, yeah.
It need not be confined only to a 10,000 rupees for a vendor as a whole. It can be a 10,000 rupees for a vendor for particular violation. Violations can be enumerated.
Every proceedings.
Everything can be done because I have seen of instances where orders have been passed saying earlier, your gate pass you have not filed, there is a penalty. You have not filed a classification list, there is a penalty. Price list you have not filed, there is a penalty. Then overall there is a penalty. So all these are possible. Let us be very clear when we deal with provisions that there is a possibility of penalties coming in at every stage. So we'll have to be careful when we deal with vendors.
We should possibly read this in terms of whatever is the penalty for an invoice which is incorrectly issued.
Yeah.
But
Also it is per violation.
because you are looking at an amount of 10,000 rupees, you are not looking at the tax.
Percentage, yeah.
If it is tax, it is understandable. It will equal to the tax means it's understandable. But penalty of 10,000 rupees can be violation per se.
So practically it can be, or logically it should be per instance.
Yeah, possible. There is no question about it.
And the second one is 158A. Whether there will be any drop-down list that SSC wants to give consent only to few agencies and not to other agencies? Or is it a blanket?
I think what it would happen is the GSTN will make this option to be exercised in the portal. Yeah.
Quite
So that it is non-repudiated. There is no conditional consent. The government will come out with a detailed guidelines as to what would be the agencies with whom they will share, subject to what conditions. The consent will be based on that. If any new agency with whom they have to share, the consent will have to be reobtained. Because it's a privacy issue.
Exactly.
Yes.
And government has taken enough precautions to see that once the consent has been given, it will be free from any one of those consequences. You can't sue the government. It gets insulated.
Please raise the hand.
And it is for the financial year or lifetime?
Once option.
Once.
Should be once. Yes, somebody, Deepak had a question. Hi, Deepak.
Firstly, sir, I think it was very insightful. One is forward looking, the other is in terms of behind the scenes also. That is, thank you so much for that. Now, two things. One is largely with OIADR, Kushal sir. Now, with minimal human intervention now not being in part of the definition, would your opinion now change, or we still look at the substance over form to say that
Supreme Court says we should look at substance over form in Northern Operating. That's what it said. So we should look at substance over form. But our added advantage was that the prescription saying that with minimum human intervention.
Right.
That was our biggest advantage. Now we should look at the activities, assuming that there is a human intervention, what happens?
absolutely.
So that's why we need to look at it again.
Right.
But substance over form will always prevail.
Correct, sir. And second, I think in terms of the what do you say, the quantum of what do you say, the revised estimate, so the budget estimates which have kind of come in terms of indirect tax, it's a minimal 10% increase. So any reason for such, what do you say, modest kind of estimate?
Basically, because we are looking at the GDP growth. The GDP growth is basically being toggling between 6.5 to 7. The economic survey talks about 6.8. Budget takes a fall for about 7. The coming year is going to be challenging because of the global headwinds. We are a resilient economy, so obviously I think the internal efficiency, collection efficiency going up on account of formalization, on account of plugging of leakages and loopholes, which has increased dividends in the FY23 for both direct and indirect taxes. It's bound to continue for the next financial year. But if you look at the budget estimates, the custom, it's a moderate increase of 10,000 crores. Excise duty, there is a reduction because we have rate cuts have happened. And the other part of the windfall tax as compensated. If windfall tax were not to be there, excise duty would have been much less. So we are not looking at the windfall tax in a very big way, though there's some speculation in today's press. So the excise duty is again negative when compared to the previous year's budget estimates and the actuals. On the GST front, probably I think the only tax where we are looking at it from what we have provisioned now and what we are provisioning for that. The tax buoyancy on the direct taxes is also very conservatively estimated for that. But let us look at it because this is something which cannot be missed. You see, every year the C&A used to criticize, you provide for a budget estimate and you revise it and you always end up with a much lesser amount, whereas you have provided for expenditure and that becomes a deficit, etc. The first time the REs are revised upwards, it's bad. It's about that. And that is a fiscal prudence. You see, we have plugged the borrowings at about a big amount, 11 lakh crore, and interest servicing and debt servicing is taking a big way on that. The tax collection, we have kept it at a very conservative estimate, but that is better than overestimating and then running it. We get, because the next 1 year is going to be very, very challenging.
Very interesting.
You saw the job cuts happening anyway.
The global situation is going to be.
And our exports are not growing at all. Right? The per capita income has gone up, but I think predominantly we are a service-oriented economy and not the manufacturing and things about that. The amount of the agricultural credit push has been made to make our food grain production is very good and things like that. But the value addition in terms of converting that to income and to earn a revenue out of that. So it's a conservative estimate, but I think going by the experience of FY22-23, the FY23-24, more or less the same approach. But I think the revenue buoyancy will depend upon a lot of external factors.
Thank you, sir. Sure.
It's our own economy that will service the revenue, essentially our own market.
That's what.
Other than the global research.
So we have one question from somebody on then. Lakshmi Ratna, if you can just unmute yourself and ask the question.
Yeah, good afternoon, sir. Thank you so much for the crisp presentation, and I really thank BCIC for keeping this in a hybrid mode so that everyone can attend from wherever they are. So, sir, like I had quick 3 questions. Now on the budget, there's one amendment which you all discussed on section 23. So while I've gone through the agenda, in the 47th council meeting, wherein there is a understanding that this is for bringing a parity between online sellers and offline sellers selling through e-commerce operators. One question which I had here was, this provision specifically says that it is for any person engaged exclusively in the business of supplying goods or services, or both that are not liable to tax or wholly exempt from tax. So what I wanted to understand is, what if that seller, like, is this, first of all, when I read section 23, are we supposed to see it qua the person or qua the goods? And moreover, this is for when it's exclusively supplying goods not liable to tax. So how should we read this provision was one question. And can I move to the next question now itself, sir, or one by one?
Shivdas would like to respond to this. I would give a short things, and I think probably sir can elaborate on that. See, we found there is section 22 and 24 provided for situations where a person is liable to take registration, and where 24 talked about mandatorily a person had to take a registration, and 23 provided for some sort of about that. Now, by bringing that non-obstant clause in section 23, we have effectively overcome the otherwise mandatorily imposed registration under section 24. 24 operates at two levels. One, by specifically listing the category, and also the discretion of the government to notify the persons. Now, in spite of that, I think if it is covered by 23, the 23 part of it is with regard to the persons who are agriculture persons who are providing supplies only totally exempted and things like that. I think probably we have overcome that. I think legally we had an issue, as Mr. Shivdas has mentioned, that the overriding effect what is given to section 23 in no way take away the prescription for mandatory required registered person to be registered under section 24, notwithstanding the non-obstant clause in 23. Probably that's how I will read it. Probably more legal I think enlightenment Mr. Shivdas can give.
Madam, this section 23 after amendment is very specific to say following person shall not be liable to registration, and it has an overriding effect. Anything notwithstanding anything to the contrary contained in 24. The following person shall not be liable to registration, namely any person engaged exclusively in the business of supplying goods or services that are both not liable to tax or wholly exempt under this tax under the IGST. This is qua the goods and services which he is dealing. It is not qua him. It is qua the goods and services which he is dealing. Therefore, if the goods and services which he is dealing are not liable to tax or are wholly exempt, then this provision of amended section 23 will apply.
Okay, sir. Thank you. So the next question I had was on the definition of OIDAR, wherein you have already explained us the reason as to why we are trying to make this change. But sir, one thing which I had to bring to your notice was, since like this is a concept that we have borrowed from the OECD, like it's come down from there, and even EU-VAT has this concept, and in India we have been relying on the jurisprudence there as well to determine whether there is minimal human intervention or whether it's essentially automated. Do you see that there'll be any specific guidelines or clarifications which the government may issue by way of circular after this amendment is effective or in the due course?
I think this was already discussed in the 48 GST Council meeting. A decision was taken to amend the definition of who is an online recipient and also FIDA recipient. Probably, I think there's no clarificatory circular was issued pursuant to that 48 GST Council meeting, because you have seen that 183 to 188 circulars were issued. So I don't foresee there is any clarificatory circular will come pursuant to this amendment, because this was a part of the 48 GST Council meeting, but I don't rule out. Probably I'll have to look at if the industry feels that there are areas in which clarification required, they can be made a pointed reference to the government on these issues. What are the government position? Perhaps you can look at it. And let me tell you, these decisions, the circular will have to be again issued only with the recommendations of the GST Council. So you can scenarios you can look at where you have some sort of an ambiguity, escalate it to the GST policy wing. Let us see how they respond to that.
Right, sir. So, so the last question I had was on the fact that in the IGST Act, there's an omission to the proviso. Basically, for the wherever the export cargo is there. Earlier, the understanding was that there was, first of all, 2 exemptions which was already withdrawn. That is for freight by air and by sea for outside India. And now, because of that, it becomes taxable. So the thing is, at the end of the day, GST is still a destination-based tax. So will there be any exemption going forward, or we are going to tax these transactions? Because
It was taxable anyway.
See,
yes, sir, it was
basically,
taxable anyway.
Question was
yeah, basically the 12.8 proviso was creating some sort of an ambiguity. You see, in respect of transportation of goods, the place of supply will be the destination of the goods. But we had
Yes, sir.
provided for in 12.8 that if the recipient is a registered person, the place of supply will be the place where the person is registered. If he is not registered person, the place where the goods are handed over for transportation, which is also within India. That means the tax liability accrues in India. In so far as preventing the export of taxes is concerned, the ITC route for refunding in respect of export of goods is always available, including those services. There may be a scenario where this happens, but still the goods are not eligible for export refund, probably the category notified or whatever it is. That would be an exception criteria. Ma'am, I think the point which you need to keep it in mind is 12.8 proviso was creating some sort of a misreading that has been deleted. That's
I
it.
think it was
The
more
situation remains the same. Right.
I think it was more in the context, the challenge was more in the context of questioning the entitlement to an ITC. The taxability of the freight was never a question.
That's for the questions. Probably we'll, on that note, we'll wind down. Yeah.
Yeah. Thank you so much, sir. Thank you.
Great.
We'll accept it. It's already short.
No problem. There is any questions.
So Ravi.
That is outside the budget or on what I call policy level.
Then it is. Wrap up the discussion and then maybe.
It is important because now globally we are now what I call trade situation. Recession is there. India is the only place where it is expected to grow. But one more thing is inflation is a major factor. One point to reduce inflation was at least partly bringing petroleum sector under GST. I know states are going to object to it. Any thoughts on that, sir?
Yesterday, Kerala finance ministers introduced cess on petrol, diesel, and alcohol for meeting the state finances. You need to understand that I think probably the state finances consequent to, I think the compensation has come. It depends upon different states in different way. Kerala is a destination state. It has a net gain. In spite of that, to meet the developmental expenditure of that state, I think the state finance minister will have to look at additional options available for resource mobilization. You see, this decision with regard to whether petroleum products can be brought in the ambit of GST or not is basically more of a political question which has to be looked into by the council. While there are sound reasons for us to look at inclusion of this and the methods by which it could be done, it can't happen without all the states coming on board on this matter. So we need to wait for some time. See, whatever it is, I think the amount of achievement what we have made in this 5 years gives us that promise. At 48 GST Council meetings going consensus based. Consequent to Mohit Minerals, many of them apprehended that the decision-making process will now slow down in the GST Council because the states have an autonomy to not to agree with the center or the majoritarianism. We haven't seen any slowdown in the decision-making on 48 or 47 GST Council. That way, the maturity of the Indian political democracy and the lane with which we are doing something which is globally unprecedented doesn't leave any doubt for us to look at the inclusion of petroleum products in the years to come. The timing, the government will have to, the council will have to take a call.
There's maybe one last question. Manjesh, you have to unmute yourself and ask the question. Manjesh, are you there? Okay, that's okay.
Right. Thank you, Nagin Kumar sir and Shivraj sir for taking time out and taking us through the budget amendments. It's been extremely insightful, especially hearing the policymakers' perspective on the budget and what goes through in the backdrop. The clarifications on duty-free shops and both on CSR, things like that has been extremely insightful. Thank you so much. And Shraddha sir, we're always in awe when you speak. We get a lot of clarity in thought on amendments when we hear you speak. Thank you so much. We really appreciate you both taking time out and taking us through the amendments.
That comes because of the continuous heat we get in the courts.
Take time off.
They tell us, what the hell are you arguing? So therefore, that's the only thing.
We have a small memento, Niranjan.
Yes. Stands to but yes, you would ask both at the door. Yeah.
Thank you, sir.
And then small into forest. That's
Sir, thank you, sir. Thanks. Missing. It is more like, acha, this is also possible. It is like,
they missed out taking a photo, so if you can just hold it for one more minute, then it is helpful. Yeah,
Understand.
just yes.